Stablecoins are about to face their biggest upgrade ever. With the Genius Act and Stable Act on the table, the US is rewriting the crypto rulebook. Regulation is coming fast, and it could either boost trust or trigger a stablecoin shakeout. Tether, Circle, DeFi builders, everyone's watching. So should you. Welcome to Chain Rush. Let's decode the stablecoin revolution of 2025. Stablecoins are digital dollars. They're crypto assets pegged to real-world currency, like the US dollar, to give traders price stability in a volatile market. Think Tether, USDT, USD Coin, USDC, or DAI. In 2025, these coins anchor a $216 billion ecosystem, with Tether alone holding on $43 billion in reserves. But after disasters like Terra Luna's collapse, regulators say it's time to play by the rules. Stablecoins are critical for trading, payments, and even DeFi lending. But transparency has been shaky. The collapse of algorithmic coins showed us what happens when reserves aren't real. The Genius Act and Stable Act aim to solve that by enforcing 1-1 backing, transparency, and clear oversight. It's a shift from Wild West to regulated rails. Let's start with the Genius Act, guiding and establishing national innovation for U.S. stablecoins. Passed by the Senate Banking Committee in March with bipartisan support. Here's the play-by-play. Defines stablecoins, dollar-pegged, non-interest-bearing assets used for payments. Who can issue? Banks, fintechs, or regulated non-banks called PPSIs. Regulation split. Big issuers over 10 by dollar, you're under the Fed. Smaller players can stay state-regulated. No interest. To avoid securities laws, stablecoins can't pay yield. AML compliance. Issuers are treated like financial institutions. KYC and Bank Secrecy Act rules apply. The bill passed with an 18-6 vote and is heading to a full Senate floor vote. This one's got momentum. Over in the House, we've got the Stable Act, Stablecoin Transparency and Accountability for a Better Ledger Economy. Introduced in March, it passed the Financial Services Committee 3217. Key takeaways? 1-to-1 reserve rule. Every stablecoin must be backed by real assets, cash, T-bills. Monthly reports. Issuers must publish detailed disclosures, plus CEO sign-offs under penalty of law. AML laws. Just like Genius, this one enforces full anti-money laundering rules. Exempt from securities. Stablecoins aren't securities, removing CC friction. No interest again. Yield-bearing coins? Not allowed. Both bills are aligning. The endgame? A single merged law with full bipartisan support. Here's the impact for investors, traders, and builders. Increased trust. Clear rules could boost USDC and attract institutions. Fintech adoption. Banks and payment firms now have legal clarity to launch their own stablecoins. Global influence. U.S. regulation could become the global template, protecting the dollar's dominance. But there are risks too. Smaller issuers at risk. Compliance costs could force exits or consolidation. Tether in trouble. With past transparency issues, Tether might need a serious compliance overhaul. No yield equals no innovation. Excluding interest-bearing coins limits use cases, but avoids the SEC's clause. Not everyone's cheering. Senator Warren warned stablecoins enable money laundering. Senator Van Hollen voted no, saying the Genius Act lacks teeth on illicit finance. Critics say the bills should include stronger consumer protections and more guardrails against rug pulls. Others worry the rules might overregulate a young sector. As of April 20th, both bills are flying through Congress. The Genius Act awaits a Senate vote. The Stable Act is prepping for House floor action. President Trump wants this on his desk by August, and insiders say it could happen within his first 100 days. A joint bill is likely. Get ready for U.S. regulated stablecoins by Q3 2025. This is the future of stablecoins, and Chain Rush has your front row seat. Will regulation spark innovation or stifle it? Drop your take in the comments. Smash that like button, subscribe for more crypto breakdowns, and stay ahead of the curve. The crypto market moves fast, so do we. See you next episode.